This is Real Estate Rookie, episode 121.
When I got that one under contract, the seller, their family actually owned the two adjacent cabins, and they were looking to sell those as well. And so when we closed on that first one, immediately we negotiated and went under contract, off market on the two adjacent ones. And so we ended up getting a really cool, 3 cabins and a cul-de-sac at the end of the road on 5 private acres, and it worked out really cool that way.
My name is Ashley Kerr, and I'm here with my co-host, Tony Robinson. Tony, I have some news. I'm not sure if it's going to be good or bad.
What's going on? Do I need to sit down for this news?
Yeah, sit down. I have, my self-storage facility I have under contract. I did a phase 1 environmental study, and it's recommended to go into a phase 2 environmental study. So after the phase 2, they'll find out if there's environmental issues and if they need to be remediated. So I spent the whole weekend talking with other investors as to, okay, what's your opinion? What should I do? Blah, blah, blah. Because I have to shell out, I paid $3,000 for the phase 1, and now I'll have to pay another, I think it's $8,000, the quote for the phase 2. So if I pay this out and there's environmental issues, I'm probably going to lose all that money and not get anything out of it. So I think what I'm going to do is, what the consensus is from most of the other investors is that if there are environmental issues, even if the owner agrees to clean them up and take care of it, still walk away from the deal. They don't want to touch anything that has had a history of environmental issues. Second thing is that I could ask the buyer to pay, or the seller to pay for the phase 2. So that's what I'm working on right now, is seeing if they will actually pay for it, because if our deal falls apart, they're still gonna, any other knowledgeable investor will ask to do an environmental study, so they'll need to have it done. So at least they'd have it in hand already. So I don't know, but yeah, that's what I'm struggling with, and that's why I have only slept a couple hours every night, keeping me up at night.
These environmental studies are haunting your dreams.
Yeah,
so.
I know. So what's new with you, Tony?
Well, yeah. Well, I hope you figure that out. I'm sure it'll work out for the best. But what's new with me? So we have a property in Joshua Tree. This was supposed to be our first flip, like our first Joshua Tree flip, where we bought it solely with the purpose of flipping it. And it should be done hopefully like this week.
This is the one you're rehabbing, right?
Yeah. So we have 2 rehabs. One's going to be a hold for sure. We know that. But the second one was where we bought specifically with the purpose of flipping it. But I walked it yesterday, and I like this property so much now that it's done. We're debating on if we should actually sell it or not. Because I've mentioned this before, but I think one of the things we're going to start testing out is just trying to see if there's an appetite for turnkey Airbnbs and the different markets we invest in. And this one's going to be a great kind of case study to I guess see if we're right. But man, it's just such a nice place. It would fit so well in our portfolio. So I don't know. I guess once it's all said and done this week, we'll decide if we're going to list it or not.
And I think that's an awesome thing, is that you have multiple exit strategies as to where to take this property. So you can hold it, you can sell it. So that's awesome. That it will work both ways for you.
I hope so. And speaking of multiple exit strategies, today's guest, I think, did a great job of exemplifying that. You like that transition? That was a good one.
Yeah, I did. That was great. Before you make your transition, though, I'm going to put a pin in it, because I have to give a shout out. I met an investor at the Fixated on Real Estate conference. Met him, Jay. He had actually been an episode had released just Wednesday before the conference, and we played his voicemail on the show. So it was so cool. He had just been on the episode, and then then I got to meet him. So really cool. But okay, go ahead. I'm so sorry to interrupt that perfect transition. Please continue.
Today's guest, his name's Cale. Cale and I actually connected on Facebook, I think. He and I were in some of the same like short-term rental related Facebook groups. And he and I had been chatting before he even bought his first one. He was a listener of the show, but he just took massive action. This guy he's at 10 units after a year and a half of investing. So he just gives like a really cool breakdown of how he started off in the long-term rental space with small multifamily, made the transition into buying cabins and didn't buy one, but bought 3 to begin with. So he's just really crushing it in that space. And his story talks about how he made that transition, but he also talks about how he balances self-managing this portfolio of 10 units while also, having a very busy W-2, having a wife, having 3 kids. Just so many really good stories and lessons, I think, from his story today.
Yeah, and I think that a big thing that we didn't dive too much into, and we probably should have more, was that he's prepared himself to become a real estate investor. He's been frugal all his life. He's saved his money. He, has different financing options. So I think that's an important piece. Even if you're not ready to start investing now, get your finances in order and be good with managing your money, because it really will set you up for success getting into real estate investing. Okay. Let's bring Cale onto the show. Cale, thank you so much for joining us today. Can you start with telling everyone a little bit about yourself and how you got started in real estate?
Sure. I'm 37 years old. I grew up actually in the Northeast, New Hampshire, so I know the feeling of the winter, Ashley. I feel your pain. But I moved down to South Florida when I was 18 for college and went to University of Miami, studied engineering, and when I was graduating, I realized at that time that I didn't want to do any design engineering. That really wasn't my passion, and I had started kind of taking an interest in just investing in general and a little specifically with real estate. And so actually my senior year, I had started interning with a large commercial real estate investment firm, and after I graduated, I went full-time with them. I worked for a couple of years as a commercial real estate broker and sold multifamily properties down in South Florida. And it was a good experience, just terrible timing. This was 2006 to 2008. And so, come 2008, when things started drying up, I jumped ship on that. I didn't really love the broker part of it. I liked the education part, but not being a broker. And so I jumped ship, and, I didn't really do anything with the knowledge at that time. I think I was just still too young and just, more focused on I need to, make money, get a career type thing. And so I started working in construction management, which is what I've been doing for the past 13 years. And so that's what I do now still, as a senior project manager. And, I'm married, 3 kids. And so about a year and a half ago, I kind of just had a mental switch go off that, I need to start working for myself and building wealth for myself and my family and not just for somebody else. And so I made that decision really in January 2020. I just said, I got to pick something. I'm going to start investing, start building wealth. And so I chose real estate, and I just really jumped all in. I just, that's when I started devouring podcasts, Bigger Pockets, reading everything I could possibly find. Analyzing deals daily, walking the market, doing all the stuff that Brandon Turner recommends, to get your first deal in 90 days. Right. And lo and behold, it works. I literally did that. I picked a market. I walked it, pushing a baby in a stroller, walked every street and put in offers, got one accepted, and we started off on the journey that way. So it's been a fast journey, a bunch of highs and lows, and we've been kind of just cruising along since.
Cale, when you said that you had a mental switch, at first I thought you said you were going to have a mental breakdown. I was going to, I have those. I have those. I can relate. But, yours is way more positive.
Well, maybe it probably was more of a mental breakdown. Quarter life crisis, midlife crisis, whatever you want to call it.
This is great. This is awesome. And I'm excited to dive more into your story. But can you just give us just a snapshot of what your portfolio looks like today?
Yeah. So right now I have 10 units total. I have 5 long-term rentals, which one is a single family home. 3 are part of a quadplex. And one, I guess I'm calling it a unit, but, it's actually our primary, but we house hack as well. And then we have 5 short-term rentals, which 4 are cabins in the Smoky Mountains. And one is 1 unit of that quadplex, that we converted to a short-term rental.
So let's break this down a little bit. All right. So you get this. Well, first of all, congratulations on the growth, right? Because you're 1.5 years into this and you're at 10 units, which is fantastic, right? So I think that speaks volumes of the action taker that you are. And just to give the listeners some backstory, Cale and I, we're in some of the same Facebook groups around short-term rentals. And, I think we had spoken, Cale, before you even got your first one, if I recall correctly, right? And then I think you started posting about I got my first one. And then a couple months later, hey, I got my second one. And then I got my third. Now, and I was like, all right, we got to get this guy on the podcast so he can share a story. So just kudos to you for taking massive action. But kind of walk us through that journey, right? So that very first deal, kind of what was it, and what was it about that deal that made you say, okay, this is the right thing for me?
Yeah. So the first deal was a local one. I didn't have the nerves to try the out of state right away. Which I think everybody kind of has, or most people have that, but I'd like to dispel that myth. Honestly, the out of state ones are so much easier to manage than the ones 20 minutes down the road. So, so it was actually a quadplex, about a mile or so from the beach. I live in Palm Beach County, Florida. And, I picked a market that was kind of, like I said, it was close by, and it was, kind of like a artsy, beachy type community, lots of small multifamily, because I didn't want to do single family. I knew that I wanted to at least do small multifamily. And the initial plan was scale it into larger multifamily and grow it that way. And so I picked that market, did all the research, like I said, walked the market, scoured Zillow and MLS daily, and just started submitting offers. And I mean, I don't know how many offers I submitted, they all got rejected, and this one got rejected actually the first time. And then I kind of circled back a month or so later and gave them an offer again, the same thing, and this time they accepted it. And so we got it under contract. So it's a quadplex. It's basically like 2 duplexes actually on the same lot. And it's a cool building. It's old. It's 100 years old, which most of the properties in this area are. And so it's 2 1-bedrooms, a 2-bedroom, and a studio unit. And that's the first deal.
So, I don't want this to get lost in the listeners, but you said you submitted an offer initially on this first investment and it got rejected for whatever reason, but you followed up with them a month later and lo and behold, it got accepted. There's a lesson to be learned there about consistency, about persistence, and just really knowing that just because your first offer is a no, that doesn't mean that it's always going to be no, because you never know what's going to happen with that other person who had that property under contract. Cale, do you know what the story was? Did they have another offer and that person didn't perform, or did it just end up sitting longer than they wanted it to? Why did they reject you initially and then accept your offer after all? Yeah,
so when I had first submitted the offer, it was relatively new on the market. And so I think, they were just kind of holding out for something better, which, didn't come along. And, this was April, I think, 2020. So this was right when the pandemic came crashing down, so I think that had a lot to do with it as well. They were an out-of-state owner, older, and, they were just trying to, free up some of their portfolio. And so I think timing had a lot to do with it. And, I circled back, and this was, I forget where exactly I'd heard that tip, but it was from, either a podcast or a book where it was, hey, don't just submit and forget, keep circling back. So that's what I did.
That was actually me, Cale. I'm pretty sure you got that from me.
Hey, it might have been. You got a lot of credit in this one.
No. But I love hearing that, man. And like I said, it's something that happens often, right? You hear a lot of investors say that, I feel like I've heard Brandon say this on the other podcast too, is that he'll submit another offer for the exact same amount. Like everything's exactly the same, but he just puts it in again, and just kind of getting in front of people. It kind of jogs their memory. So you have this fourplex. You get this in the middle of the pandemic, right? Which is, again, I think shows how much courage you have as an investor to kind of start investing in such an uncertain time. How much time after that first investment do you roll onto the second one?
So we closed on the fourplex in June of 2020. And then the next one, which was the first cabin in the Smokies, we closed on in February. So it was a decent amount of time. And I guess the reason is I kind of had a little bit of the shiny object syndrome. And, I started just looking into a lot of different things. I mean, I saw the cash flow from this and, it was good, but I just started thinking of, man, it's going to take a lot to get me to where I want to be, in terms of the numbers. And so I started looking at different things that had better returns. Like I really started heavily looking into residential assisted living. I mean, I even went out to a seminar in Phoenix with Gene Garino's team for the residential assisted living, and got really interested in that. And I kind of got a little bit intimidated by it, honestly, just because of the business aspect of it, more so than the real estate. I still really like the idea. I hope to get into it in the future. But so, yeah, I just kind of was looking at a bunch of different things, and I just wasn't sure what direction to go. And then the serendipity happened when I heard your podcast, Tony.
So I actually do get credit for that one, right?
you do get credit, yeah.
That's awesome, brother. So what was it about the short-term rental space that kind of piqued your interest? Like, was it, because I guess let me frame it this way, right? Like a lot of people, I think, understand that short-term rentals typically are going to generate more revenue than a traditional long-term rental. Like there aren't many people that argue that. But what I think shies a lot of people away from stepping into the short-term rental space is that it definitely is more management intensive than a traditional long-term rental. So were you afraid about this really management intensive asset class? And now you're finally going out of state, right? This is long distance. So what were your thoughts around some of those obstacles, and how did you push past those?
Yeah. I mean, I had honestly this first one, this quadplex, the first few months of having it was a heck of a lot more work than I thought it was going to be. We had some troubled tenants and just a lot of challenges. And I was like, man, if this is what the long-term rentals is like, I don't know if I want to, be in this. And I kind of had, when we bought this too, I kind of had the long-term plan if I wanted to make it into Airbnb. So I kind of had the short-term rental thing in the back of my mind. And then, when I heard your podcast talking about the Smokies and the cabins out there, from a personal standpoint, I was like, oh man, like I'd love to have a cabin out in the mountains. Like that's always, it's like a dream of a lot of people, right? And if I can have something that like that and it's generating great returns, I mean, man, this sounds awesome. And just the description you were given, the numbers, I was like, geez, this sounds too good to be true almost, really. And I didn't even know where the Smoky Mountains were. And so literally after the podcast, I popped open Google Maps on my phone, and I'm like, it's only like 14-hour drive away, and this is like the week before Thanksgiving, and I had already scheduled that week off from work, and we didn't have plans though. And so, I talked to my wife. I was like, hey, you want to take a trip to the mountains next week? And so we literally packed up a minivan, packed to the brim, 7 people and luggage, and drove out to the Smoky Mountains and hooked up with the realtor that we used through the Bigger Pockets forum on the way up, and scoped out properties, met with the realtor, and just really got a feel for the area. And when we came back, I was hooked on the market and the cabins, but I was definitely still had a lot of mental hurdles to overcome, because number one, the prices are way higher than anything else I've looked at. And the competition is crazy out there, you know, as you know, Tony. And, you know, just the thought of offering over asking, just for me, that's like just a big mental hurdle. Like I'm Mr. Frugal. So just the thought of paying more than somebody's asking just hurts me, you know? So.
Well, Cale, I think I just want to highlight one thing that you said there, and it was that you heard Tony talk about this market and his success there. The U.S. is huge. There are so many neighborhoods. There are so many cities. It's overwhelming for someone who wants to invest out of state as to where to even look, where to even start. And I love that you took an investor that is having success in a market and you went and you analyzed that yourself. Look, for our listeners, for our rookie investors, look where other people are having success and then analyze from there. Use that as your starting point. Don't invest somewhere just because somebody else is investing there, but at least you can start analyzing that market and see if it fits for you instead of taking a whole map of the U.S. and say, okay, well, I'm going to start on the East Coast and analyze every city until I get to the West Coast. So I think that's awesome that you did that, because that was almost like a shortcut to you, that you didn't have to go and pull up a map like, okay, I'm going to highlight all of the great short-term rental markets that you know, have different activities and different things to do. And you just focused on that one, analyze it, and it worked for you.
So let me make one comment on that, because I think it's a really good point that you made. I think the other side to that coin is that, you know, I'm sure you get this too, right? People come to me and say, what market should I invest in? And they just kind of like drop that question there. And it's like, it's such a personal decision, or like such a decision that's unique to your own like circumstances, that I could never tell Ashley or Cale like what's the best market for them to invest in. So your point of using it as the starting point, I think, is really good. But for all the rookies that are listening, like, you guys can't look to someone else to tell you what's the best market for you to invest in. Like, you still have to do some of the homework yourself, but success does leave clues. And if you see other people having success in those markets, it shows that it might be a good starting point for you. So just on my mind, because I get that question all the time. I'm sure you do too. So I wanted to share that. Yeah,
that's great how you clarified that. Cale, you said that you got your wife to pack up and drive to the Smoky Mountains. How did you get her interested in real estate investing from the beginning?
Well, it's still a work in progress, honestly. So, I mean, we got our hands full, you know, with the family and the W-2 and everything. And, you know, she's still starting to get involved and starting to help out with the social media part more so, because I'm really bad with that. Like, I'm big into like the Facebook forums for those specific items, but when it comes to like Instagram and stuff like that, I'm like non-existent. So she's starting to get involved with that and helping out in that aspect. And so, you know, it's she's not full in yet, but she's starting to get there.
Yeah, but I think the thing is that she's supportive of you.
Yeah, she was willing to hop in and go up there and explore for sure.
Right, yeah. And I think that's sometimes people get hung up a little bit on, well, my significant other, they're not doing any of it. They're not into it yet. My husband, he can't even tell you where any of our properties are, probably. They don't have to be involved in the business of it, but to have their support is the biggest thing. They don't have to have an interest in it. I mean, you don't see me out there, you know, milking cows every day, but I'm still supportive of the farm business. So it goes both ways. But if anyone listening has a significant other, you know, doesn't want to do the social media or doesn't want to analyze deals or doesn't want to go look at properties, that's okay. But it's very important to have their support and that they're okay with you going onto this journey and doing that.
Yeah. And, you know, especially when we started looking at the mountains and stuff, because, you know, just like me, there's that emotional aspect to it too, you know, of that property or cabin in the mountains, you know, that kind of appeals to her as well. So.
Let's go on. So what happens next after the Smoky Mountains deal? Your first one there.
Yeah. So like I said, we came back, again, this was right after Thanksgiving. And, you know, I started looking at properties, on the MLS daily, and again, I had that real big mental roadblock of putting an offer in over list. And so I kind of just started scouring listings that had been on the market for, a couple weeks or a few weeks, just with thinking, hey, maybe I'll have a better chance of kind of finding a deal on that. And, that was kind of the strategy that I developed. And it worked for that first deal. I submitted an offer, 50,000 below list, and they accepted. And, it kind of, I guess a lot of it's a bit of luck, in that, when I got that one under contract, the seller, their family actually owned the two adjacent cabins, and they were looking to sell those as well. And so when we closed on that first one, immediately we negotiated and went under contract, off market on the, the two adjacent ones. And so we ended up getting a really cool, 3 cabins and a cul-de-sac at the end of the road on 5 private acres, and it worked out really cool that way.
Cale, so now you have your family compound for when you retire. Bring the whole family. You got 3 houses and 5 acres. But I want to know how you knew that though they had these other properties. Did you ask? Did they tell you? And how did you do it as an off-market deal?
Yeah. So when we went under contract, I guess my realtor, just through speaking with the listing agent had mentioned to him that they had the other 2 cabins, and they were interested in selling those as well. So he brought that to my attention, and we just started looking at them. And initially, I didn't know if I was going to be able to handle it. That was, again, it was a lot of money, a lot to bite off, and I was a bit nervous, and that's why I didn't lock them up right away, because I was like, man, let me do this one. Let me take it step by step. Kind of wish I'd done it. Probably would have gotten a better deal doing it all at once. But, so he brought it to my attention. I just kept it in the back of my mind. So after we closed on it, then we opened up discussions with the seller on the other 2. And they had a price in mind, and we negotiated a bit. And got some, negotiated a bit on the price, a bit on some credits, and ultimately came to, an agreement and locked them in.
For your experience doing an off-market deal, how would you say that differed from using an agent and going through the sales process? And do you have any advice for rookies of things they should know when doing an off-market deal where they don't have an agent representing them?
Right. So, and actually to clarify, so we actually did still use, or I still used my agent to do these. So for me, it was pretty much a seamless process. No real difference. The only difference, I guess, was
so really it was just that it wasn't listed online, so the agents were still getting commission.
Yes,
but you didn't have anybody bidding against you.
Exactly. Yeah, there was no competition.
Okay.
Yeah. So yeah, just it worked out, really well that way, and being able to do that.
Yeah, and I think that's just such a huge advantage of being able to ask sellers or finding out from sellers that they have other properties, is that they have you as an easy buyer, that you already closed one property with them. They know you can close the other 2. Why go through the hassle of even listing it? Yeah, that's awesome.
But that's such an important point, Ash, is that once you can, and you hadn't even really done this yet because you were still under contract, but once you can prove to someone that you have the ability to close, it makes it so much easier to get that next deal from them, right? And we see this in Joshua Tree, where we invest at, we just got 3 more properties under contract from the guy that built the other 4 houses that we bought that he had built before, right? And he's coming to us first because he knows that we have the funding, we have the ability to close and make it quickly. It's a smooth process. He only has to do it with one person. So it's when you can show that you have the ability to close, I think that's what opens up so many more doors and opportunities for you to get more and more deals. So congrats, Cale. That's awesome, man. I actually didn't know that that's part of how you scaled so quickly, man. So you close on that first short-term rental in February. When do you close on the second 2 on property, on numbers 3 and 4?
So yeah, we closed on the other 2 in beginning of May. Yeah, beginning of May.
Okay,
Yep.
So a couple months later. And then from there, you guys continue to purchase, right? So when was the next acquisition after that?
So we were under contract on the next one, I think within a few weeks after that. Yeah, just the bug kind of bites you. A few weeks of not getting a deal feels like an eternity.
Yeah. Crazy how that changes, right?
Right. So yeah, we just closed on that. I think at the very end of July. So yeah, just a few weeks ago.
Okay. So I think one of the questions that our listeners might be thinking is, Cale, you're doing a great job and you're closing on these properties. How the heck are you affording all of these different purchases? So can you maybe walk us through what the price points were for each of these purchases, both in the long-term and the short-term rental side? And then once we do that, just kind of give us the idea of how you funded all of this.
So the very first one was the quadplex. Again, so that one was, so they were asking $488. I got it for $400. And I financed that one with 25% down, just investment loan, like 3.6% interest. And it was just, and I actually, on that first one, important point, I guess, also is that I actually partnered with my father on that very first one. That quadplex, which was kind of as like a safety cushion, it's a little more comfortable, obviously, doing something like that where there's somebody else a little more experienced to fall back on. So we did that. And then the first cabin was, they were asking $700. We got it for $650. And we actually ended up increasing the price while we were under contract to $660 and having them give back a $10,000 credit at closing, just to kind of help with the closing costs a bit. And we did a 10% down second home loan on that one, which I know you know all about those. And that's, for rookies and getting into different markets, I mean, that's huge, especially for your first one. My goodness, that's an excellent bit of financing to take advantage of. And then the second, third, and fourth cabins were all conventional investment loans with 15% down. And as far as, how did I afford them? So like I said, the first one I did partner on, so we split it 50-50. I had also, right before COVID really locked things down, I had gotten a HELOC on the single family home investment property that I had. So I was able to pull out a $150,000 HELOC on that property. And so the first cabin I just did with my own funds. The second and third, I actually used the HELOC for pretty much the entire down payment on both of them. And then the fourth one was just from personal savings as well. So, the second and third ones are pretty much ultimately no money down in that aspect, which is kind of cool, that the whole concept of infinite return, right? And I mean, like as I mentioned before, I'm kind of Mr. Frugal. Just my whole life, I've been very, very intentional about my finances. I live below my means, just always I did very well in keeping track of my finances. So, I've saved for a long, long time, and it was just a matter of now's the time to pull the trigger, on making some moves.
Cale, I've seen this question a lot. Actually, I think when Tony and I were doing rookie replies, it came up as a question not too long ago when we were going through them, as someone wanted to know, how does it work with the line of credit? So can you explain how you're paying your line of credit back?
So, yeah, with the line of credit. So again, this was on an investment property. And like, honestly, this is kind of fun. This was actually the last HELOC that they approved before they stopped offering HELOCs because of COVID. So I literally got the application in like 2 days, I think, before they cut it off for investment properties. And so we got the HELOC approved. And as in terms of paying it off, it's, this is interest only, for 10 years. So, you of course can pay the principal down as you want. But otherwise it's just an interest only loan. So it's like a checkbook almost. you can write a check, you can wire money, you can use a debit card from the account. But it's not like a cash out refi where, you're taking all those funds and you're paying the interest and everything on those funds right away. You only pay for what you use, and when you pay it back, just like a credit card almost, you don't pay interest on those funds anymore.
So those funds you are using for down payments, you said you've used them for a down payment on a property?
Yeah. So I used, I maxed it out and used it for the down payment on 2 of the cabins.
Okay. Yeah. And can you explain how you're paying that back, how you work it into your numbers to pay that line of credit back? Yeah. Right.
Yeah. So in my analysis, I just factored in that additional interest cost for what I was going to be paying back on that HELOC from those cabins. So I added that into my analysis on the front end.
Yeah, and that's great that you use that as a tool, because I think people get caught up on, well, I have a mortgage, so my property's paying that mortgage. Well, I don't want to have to personally pay back my line of credit. Well, you don't. You work that into your numbers so that your property is paying back your mortgage and paying back your line of credit. So you run the numbers to make sure the deal will still work for you with both of those loan payments. And as you grow and get into even commercial real estate, there's so many different ways to do creative financing, where you may have a mortgage, you may have a private money lender, you may have a HELOC, and you may have a partner, all these different things. But you just really, the best thing about real estate is that there's so many different ways to actually purchase a deal. But you just have to make sure that everything still works when you run your numbers. Even with lenders, like, oh my gosh, this hard money lender wants to charge me 10%, but a bank would give me 4%. But if you can't get bank financing and hard money lender is your only option, if the deal still works and the numbers are still great, then it's worth paying that 10% than never getting the deal at all. So thank you for explaining that, Cale, is the line of credit and how you put it into your numbers to pay it back. Yeah. And
one thing I forgot to mention actually too, is actually on the fourth one, for the down payment, I actually took out a 401k loan, for that down payment. And I had the funds, but they were in a stock brokerage account, and I didn't want to realize those short-term capital gains. So I took out the 401k loan, and that's very similar to the HELOC almost, just in the sense of, you have a set payment, and in that regard, it comes directly out of your paycheck with your W-2. But, again, you just factor in those numbers into your analysis, so your property's paying for it.
Yeah, awesome breakdown, Cale, of how you're using these kind of creative financing options, because, a lot of people think that, I think we have to remember that a lot of people in the audience are at varying stages of their real estate investing career. Like, I was talking to someone the other day, and he was like, Tony, if I want to go get a loan for a house, who do I even go talk to? Do I call my accountant for that? And it's like, there's so many people who have this perception of real estate, that, they don't understand that there are different ways to kind of get the deal done. So, love that you're using all these different kind of creative approaches to make this happen. So, so Cale, you're obviously killing it, right? You're crushing it. You're moving super fast. But it's like you put your head down, you look up, and now you've got all these units that you have to manage, right? And you mentioned at the top of the show that, you're a family man, you've got a wife, children, you've got a W-2. How the heck are you making time for all of these properties that you're self-managing, but still kind of keeping the rest of your life in somewhat of a balance?
Yeah. I'm not going to say it's easy, but, again, it all kind of, for me, it all goes back to discipline and intentionality. I touched on earlier that, I've always been really, really disciplined and intentional with my finances, not necessarily with having a set goal in mind, but just doing what seemed right, what was kind of common sense of how to, deal with your finances properly. And that's just kind of how I am with everything. So when we had our youngest, who was almost 2, I had to just flip my schedule literally 180 degrees to just manage things. I like going to the gym. I like staying fit. And when he was born, I couldn't do that in the evenings anymore. So the only way to do it was I'd have to get up in the morning. So I kind of change my schedule. I'm not a morning person, still not, but I by force of nature, I get up now at 4:45 in the morning and do some meditations and head off to the gym and come back before work and get all that stuff cleared out. Then I do my W-2 job, and then in the evenings and everything, that's where we're trying to take care of any of the things with the rentals. Even this week, I've had we got a turnover of one of the long-term tenants at the local property, and so I've been meeting contractors out here to take care of some painting and stuff like that after work. So it's being disciplined with your time, scheduling. I mean, time management is big for me as well. So I use a calendar. I mean, if I set appointments, and I that's how I really keep track of things. But yeah, it's if you want something bad enough, you're going to make the time, right? That's kind of my motto on it. And so it takes some pain. I mean, like I said, I don't enjoy getting up that early in the morning and going to the gym that like that, but it's what I have to do to be able to maintain that thing that I want to do in my life. So yeah, it's that's really it. You just gotta really set your goals and stick to it.
Cale, I want to follow up on this a little bit. So with you're kind of time blocking your day. So you're getting up, you're doing the gym, and then it's work, and then it's family time. What do you think? What do you want your life to look like? What is your why? What is driving you? Like, what's the end goal? You said you don't like to get up in the mornings, but you're making time. Why are you building out your day now for the future? What's the future look like for you? Yeah.
The future is having time, right? So that's really the goal. I kind of circle back to it again, and really because the life-changing, I think, moment for me was when our youngest was born. We have 3 kids, but the other 2 are from a separate. My wife's separate marriage, so he was our first together, and so my first child as a baby as well. And so when he was born, it was really a life-changing event, and that's why that was kind of the trigger again, even just for wanting to start this real estate venture, and really starting to think of the future a lot more. So yeah, the goal ultimately is to have time to spend with the family more, to be able to travel. I mean, I love travel. That's a huge passion of mine. Before being married and the kids, I used to travel a lot. So I really want to be able to get back to that with the family, and to have a better balanced life. Because just being honest, I mean, it is tough, the way things are right now. It is a struggle to try to maintain any type of balance and things. And so, the ultimate goal is to have much better work-life balance, have that freedom, buy back my time really, and being able to enjoy these things again, with the family now.
Well, Cale, I think you are on definitely the right path to get there. You're doing awesome. One last question on this. Are you using any software to manage your long-term and short-term rental properties?
Yeah, so mainly for the short-term, so I use Smart B&B, or I guess they just changed their name to Hospitality right now, as far as the property management software. And then I use Price Labs for the dynamic pricing. And then for accounting, this is still an area I am not good at, but I haphazardly use Stessa. It's a good program. I'm just not good on keeping up to date with it. So that's an area of improvement for me, big time. But those are the 3 the main ones that I use. But Hospitality and Price Labs I'm on those daily. For the short terms. For the long term, I really don't use anything else than Stessa for trying to keep track of things.
Awesome, Cale. Yeah, I love Stessa too. Actually, all the software you use, I love all those, man. Like Stessa works great for us. I think when we had like one or two properties, but if we started to scale, it's gotten a little more complex, and we have partners on some of the deals. So we've recently started transitioning into QuickBooks Online. But yeah, Stessa is like a great, and it's free. So like, yeah, all the rookies that are listening, if you're looking for like a really easy bookkeeping solution, Stessa is definitely the way to go. And if there are any executives from Stessa, you can just send me like a check or like Venmo or PayPal or something like that afterwards. So Cale, I want to talk a little bit about your, like, I want to deep dive into one of your deals. So do you have a deal in mind that you can kind of reverse engineer for us?
Yeah. I was kind of struggling and thinking of which one to do. I mean, like the quadplex is great as like the rookie learning experience, but the numbers are a heck lot more exciting with the with the cabins.
Yeah. Let's do the learning experience.
All right, let's do that one.
Yeah, let's do the quadplex.
Yeah. All right. So yes.
Let me just kind of set the table for the listeners here a little bit. So I'll just ask you like some kind of quick hitting questions, and then we'll kind of circle back and do a bit more of a deep dive into it. So what market was this property in?
So it's a town called Lake Worth Beach in Florida.
Lake Worth Beach, beautiful. And we already know the property type. This was a fourplex. What was the purchase price?
$400,000.
$400K, beautiful. Was there any rehab or anything that went into it also, or was it pretty much turnkey?
It was pretty much turnkey.
We'll get into what it's renting for and what your profits are after that, but at least now we know it's a fourplex in Florida. You got it for a little over 400. So beautiful. Okay, so tell us how you found this deal, Cale.
Right. So I found it just actually on Zillow.
Easy money, right?
Yeah.
Yeah. and it's so funny because you hear so many people say, and it kind of is true sometimes, but that it's difficult to find a deal on the MLS. Like what was it about this property that, like, was it sitting for a long time? Was there something about it that maybe were turning off other potential investors, or is that city that you're in just not super competitive? Like, why were you able to find it so easily just kind of off the MLS?
Right. Yeah. So again, I was scouring MLS daily, so I was really in tune with the market and what was coming online. And then I think the timing again was probably on my side, just in the fact that, it came on the market like right before COVID. And then, of course COVID hits, and, I think that kind of changed things a lot for the sellers. So yeah, it was just again, being diligent about, checking the MLS and Zillow, knowing the market, and a little bit of luck with the timing, I think.
Got it. Was there any negotiation on the purchase price?
No. I honestly wasn't expecting them to accept the offer. It was one of those things where I was just going through the motion of, sending out the offer again, and, they came back and said, okay. So I was like, all right.
So you find this deal in the MLS, you get under contract for slightly less than asking, whatever, you go through your whole kind of escrow period, right? Everything's getting tidied up. But then the day comes, Cale, where you actually close, right? You sign all the paperwork, they hand you the keys, they say, Cale, this building is now yours. What the heck happens from there, right? Like, you had never been a landlord before, you had never managed tenants before. Like, what do you do to kind of get yourself up and running?
Right. Yeah. The first thing I did actually was go and meet the tenants. I went over there and because we had some of the leases were going to be turning over in a short period as well. But I went to meet the tenants, take another look at the units and stuff like that, see if they were going to renew their leases. Because again, first investor, first time investor, like, I was panicked about vacancy. Like, that just scared the daylights out of me, of having even a day of vacancy. I was like, oh my gosh, we got leases turning over, I gotta get this rented out. So yeah, I wanted to see if they were gonna renew their leases or not. And then from there it was just kind of planning, because like I said, I knew that some of those leases were gonna turn over, and so I just started getting things ready to put them on the market, researching the rental rates more and getting things ready.
So kind of talk us through that process, Cale, of meeting your tenants for the first time, right? Like I've only had a small number of long-term rentals, and like I have no idea what those tenants even look like because they're out of state. I had a property manager, right? So like when you first get this property, what do you do? Do you say, "Hey, I'm Cale. Like if your toilet breaks, give me a call." Like what is that? What does that conversation look like?
Yeah, well, the funny thing is that I actually, when I went over there to meet against 4 units, I only ended up actually getting to meet one. The other 3 weren't home at the time, so I had prepared even like a little letter that I had just in case they weren't home, and I just typed out, "Yeah, hey, I'm the new owner. Here's just to summarize, here's your current lease terms. Let me know if you plan on renewing your lease. Check yes or no type thing." And so, so I left that for the ones that weren't home, and then the one guy that I did meet, he's actually a pretty cool guy, and ended up staying there and chatting with him for quite a bit, and I learned a lot about the property from him, which was really interesting. That's kind of a little key takeaway there for people is, talk to your tenants, especially if they've been there for a while. They're going to tell you a heck of a lot more about your property than anybody else. Probably some things you don't want to know too, but.
So how many tenants end up not renewing their lease?
So they've actually all turned over, which has worked out really well. Rents were below market. And so we, immediately were looking to raise the rent. So in that letter, that I had, I put that, if you are going to renew your lease, this is what the new rent is going to be, as well. And they were pretty significant jumps, so I guess I'm not surprised that they, they didn't renew them,
So talk us through your journey then, Cale, of, marketing for new tenants, screening those tenants, getting the units filled. This is your first time doing it. Like, how were you educating yourself? What mistakes did you make along the way? What lessons were learned?
Oh, yeah. Well, the first one was a fun one. I marketed them just on, I marketed on Facebook Marketplace, and Craigslist. And I think I even used, Zillow even, to market them. Most of the hits came from Facebook Marketplace though. And that's almost like exclusively what I use now whenever I have to rent out the long terms. And so the first tenant that we ended up getting in, I had good intentions of, doing the background checks and everything. And this tenant had a story of why the background check wasn't going through. And, again, like I said, I was just like, man, I don't want to have any vacancy. Like, I don't know, she seems kind of nice, and so, we broke the rule, right? Which is like, red flag number 1, never break your rules, right? You set them for a reason. And so we let it slide, that the background check wasn't coming through, and she moved in and paid the rent, no issues for the first couple months. And then I started getting complaints from the other tenants, of like, they were banging on their door at 3 a.m., these domestic disturbances, police getting called to the property. She actually got arrested twice on the property. And so by when I found out about, and I didn't find out about these arrests and all these things until most of it had already happened. And then I found out about this all and tried talking with her and said, hey, we got to do something. This is not, this is not working. And she actually just kind of disappeared for a couple of weeks. Like I couldn't reach her, couldn't do anything. And so I was like, all right, we're going to have to move forward with an eviction. And so I put the notice on the door, still trying to reach her, couldn't find out anything. And then like a week later, actually one of the other tenants called me and it's like, hey, she just packed up her stuff and left and gave me the key. I was like, well, okay. I was like, all right, well, good.
Yeah.
Saved me a lot of trouble there. So yeah, she was.
But Ashley, you talk about this all the time too, right? Is that sometimes just putting that notice up there is enough to spur action to get them to leave on their own, right?
Or to pay, right. Either one.
Yeah. Yeah. So she left and we just, we rented it out actually like a couple weeks later and still maintained the 0 vacancy.
Okay, beautiful. So what are the units renting for now, Cale, and what kind of profits do you typically see from a cash flow perspective?
Yeah, so the two one bedrooms, they were currently renting for $1,100. We're actually turning one of them over right now and raising the rent to $1,150 on that one. The studio we rent for $900. The two bedroom, when it was a long term, we were renting it for $1,395, but we converted that to the short term in March of this year, and now it is grossing $4,000 to $5,000 a month.
Jeez.
Yeah.
That is fantastic. You know, like that's a fantastic business model, right? It's so funny because I was literally looking at fourplexes in the Florida area like last week with the goal of Airbnb all of them out. So like what a tremendous way to take this property, this unit that would have been grossing like $1,300, and you're like 3xing that by turning it into an Airbnb. So that one property by itself is now doing as much as almost all, or that one unit by itself is doing as much as like the whole thing was before.
Exactly.
Right? So man, what a fantastic first deal for you, Cale. Yeah. I guess any other like lessons learned that you just want to share with the rookies that might be helpful for those trying to get that first deal done?
Don't stop with the education, and always look for cost saving strategies. I mean, especially with the long-term rentals where typically, the margins are a lot slimmer than with the short terms, when we first got this, I was like digging into every little thing of how can I reduce expenses, shopping out, pest control, lawn care. We even added, this is South Florida, so hurricanes, of course, that's a big thing, and insurance is crazy expensive. So we even added some additional hurricane straps on the roof, which cut our insurance almost in half. One key item I took away actually from an online real estate seminar I took was it's called RUBS, Ratio Utility Billing System, where if you don't have separate water meters or electric meters or whatever on your property, just a method of separating those expenses and still passing them on to the tenants, because before the owner was paying all the water, there's only one water meter. And so when I saw that, I was like, oh, that's beautiful. And so as the leases were rolling over, I built it into each of the leases that, they pay for a certain percentage of the water. And that $50 seminar saved us, like over $3,000 a year in a water bill. So just look for just keep educating, keep learning, and look for ways to cut costs.
What was the name of that program again? That website? So
this was actually through Brad Sumrock.
No, I meant like the utility splitting.
RUBS, RUBS, Ratio Utility Billing System.
And we'll put that into the show notes for you guys at biggerpockets.com/rookie121 if you guys want to check out that link. Well, thank you, Cale. I'm sure there's going to be somebody else that's going to be saying, just from listening to that one podcast episode, I got to learn about that. So I'm going to take us to our rookie request line. Anybody can call in at 1-888-5-ROOKIE and leave a voicemail for Tony and I, and we will pick your question to be on the show possibly. And today we have a question for Cale. Cale, are you ready?
Yes, I am.
Okay. Today's question comes from Mario.
Hi, my name is Mario. I'm out in Nevada, and I'm trying to get a loan for a vacation rental and having a hard time finding a bank that will accept short-term rental income as income. If you could please help me out with that, that would be awesome. Thanks.
Yeah, so that's a very good question. So it can be a couple things, and it depends, where they're at. I guess the first thing would be find the right lender, so talk to lenders that are specifically into lending for the short-term rental market. Because a lot of the conventional lenders who aren't in tune with the short-term rentals are going to be a lot more risk averse, I think, when it comes to that. But there's plenty of lenders out there too who specialize in short-term rental financing, and of course they're going to be a lot more in tune with that. The second thing would be, how long have you had that income? And if it's less than a year and you don't have it on a tax return, then it is going to be harder because even those lenders who, are specific short-term rental lenders aren't going to qualify that income either. Right. So yeah, you just got to really shop around for the lender. If you need to wait, you might have to wait until you can get it on a tax return. The third part, I think, really, it comes down to the appraisal as well. And this is where being in a really good vacation rental market can help because, when they do the appraisal, they're not only appraising the value of the property, they're appraising the rental value of it as well as a long-term rental, so to speak. So, if the appraised rental income as a long-term is sufficient, then, that can help offset the expenses and help with your DTI as well.
Yeah, great advice, Cale. Like they're like you said, there are companies that specialize in short-term rental lending. Host Financial is one. Vizio Lending is another one. I think there's one called Lend Simply. Like there's a few more of these like STR specific lenders that are starting to pop up, which is really cool because like if you look in like the apartment space, there are lenders that specialize in like big multifamily, right? But we haven't quite seen that infrastructure being built out yet for short-term rentals. But we're slowly starting to see more and more of those lenders kind of coming online that can underwrite a property based on its projected short-term rental income and not necessarily just the long-term rental. So awesome, man.
Yeah, and just like you mentioned, the Host and Vizio, I mean, yeah, those are great options too, where they don't necessarily factor in the debt to income. You may pay a higher percentage. But you have that benefit of not being tied into that DTI.
And it maybe pay a higher interest rate for a couple of years, and you can kind of refinance out later after you've shown that this property is producing a certain number of income. So lots of options there. Great advice though, Cale. I want to take us into our Rookie Rockstar, and today's Rookie Rockstar is actually a previous guest of the Real Estate Rookie podcast, Kevin Christensen, who is on episode 51 as our Rookie Rockstar for today. And Kevin, just for you all, is super active in the Real Estate Rookie Facebook group. He's one of the guys that provide more value than anybody else in that group. Just always kind of giving back to that community. But Kevin met Micah in the Real Estate Rookie Facebook group, and they purchased their first deal together in sunny Florida. And their plan is to use that as a short-term rental. It's a 5-bedroom, 4.5 bath with a pool, 4,000 square feet. And they got it for $45,000 under asking price in today's market. They're saying that it only needs about 15K renovations for it to be ready to get furnished. So major shout out to you, Chris, or to you, Kevin, and to Micah as well.
That's awesome. And I had seen Kevin post that, and he had put in there how many connections he have made into that group, meeting with people. And I'm glad he found a partner out of it. Super awesome. So if you guys aren't already, join the Real Estate Rookie Facebook group and meet and connect with like-minded individuals. Well, Cale, thank you so much for joining us today. This has been really awesome, and congratulations on all of your success and more to come. Can you please tell everybody where they can reach out to you, find some more information about you?
Yeah, so, I'm on Facebook, just Cale Delaney. Like I said, Instagram, I'm not that great on that, but we did just start a page for our properties as well, which it's MTN, like Mountain 2C Cabins and Cottages, with underscore between each word. So MTN Mountain 2C Cabins and Cottages with underscore. That's our property or our business Instagram page. We're working on getting a Facebook page for the properties and a website and all that stuff, but like I said, I'm a little behind on the social media. So reach out to me on Facebook, the Bigger Pockets forum, Rookie Podcast forum. I'm in there. Reach out. I'll be happy to connect.
And we'll link all of that information of how to reach out to Cale in the show notes at biggerpockets.com/rookie121.
So one other thing I just wanted to mention too, and especially, for people who say, there's not time, or, I have a family, or, it's easy to make excuses for a lot of things, to not take action. But, one thing I want to bring up is that, like I said, I'm married, have 3 kids, but we still house hack. I've house hacked since college. I've actually never lived alone. So, it may seem kind of weird, to be a full family and still house hack, but, I mean, we do it. It works out pretty well. And I mean, just that alone brings in, $9,000-$10,000 a year for doing almost nothing. So, I just encourage people to think outside the box a little bit and maybe step outside your comfort zone even and looking at ways to, generate additional income and really, help you in your investing journey.
Well, Cale, thank you so much. It's really been great. My name is Ashley at Wealth from Rentals, and he's Tony at Tony J. Robinson on Instagram. And thank you guys for joining us today. We will have another episode on Saturday, a rookie reply. We'll see you guys then.